Good morning, everybody, and welcome to the Stealth Trader pre-market analysis and trade plan setup for Thursday, October the 30th, 2014. My name is Doug McKay. I am the head trader and moderator for Stealth Trader. If you're interested in checking out our software or our Stealth alerts, please go to www.stealthtrader.com and take our 30-day free trial. We are just getting the new room set up now. We signed the contract and we are getting the API built for it, so we will be moving over there just before we go and get into our new office. Our new office is running a little bit late. Probably won't be in there for another week or two, but it's looking good. Anyway, each morning we come together to go through my analysis, take a look at the structure of the market, look at the macro to the micro, and then determine what our hypothesis for the day is and what our trade levels and targets are going to be. So stick around with us. I have to get legals, so let me do that. This information is for the purpose of educating members who want to expand the knowledge of business trading. It's not for trading investment advice. You are responsible for the trades or investment decisions you make. Trading futures, any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors can use more than initial investment. Nobody at Stealth Trader is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Hold on a second. Okay, so let's take a look at the numbers, and then we'll get into going through our regular routine. Going over to let's do the data report first. We just had unemployment claims out. I didn't even have a chance to see how we reacted to it. And then we had advanced GDP as well. And then the next one is going to be at 8 Central, 9 Eastern, which is in about 5 minutes. We got Fed Chair Yellen speaking. I didn't do enough yesterday for the FOMC. And then at 9:30 Central, 10:30 Eastern, we have natural gas storage. Going through the numbers, well, we're right back into this area, so the most important number to pay attention to on the ES today is whether or not we're above or below a month open at 1961. Our week open is 1960 and a quarter, but I'd be paying more attention to the month open because that will, with tomorrow being the last trading day, whether or not the bulls win this fight or where the bears win this fight is going to be right around this 1961, and I anticipate it's going to be a battle around there because the FOMC news gave us some pretty wild rotations. Average rotation was 10, and we had 5 major rotations within the FOMC. A little bit different Fed movement than typical. Yesterday we opened the Globex 76, had a high at 81.50 and a low at 74.50, and then we opened the RTH at 79.50. We opened auction in range with normal variation and the opening swing at 80 to the high, 79 to the low. Actually, that's 81 and a quarter. I know that because I had to go back and check it on a 2500 volume chart because I had 81 as well. Our initial balance high, 85.75, ended up being our high for the day. Our initial balance low, 1978.50. This 78 level, pay attention to it. We seem to be gravitating back to it, and this is where the market has been struggled for most of the Globex and yesterday's range. So pay attention to that 78.50. Just make a note in it in your journal. Initial balance 7.5 points, back to normal. All our intraday numbers were higher except for the close. We closed at 72.25, down from the prior day close. Our 20-day ranges, now, again, it was a pretty, fairly decent range yesterday, but they are constricting slightly, but they're still very large. 29 on the RTH, 36 on the full session. We're not even going to get close to hitting critical mass this month in terms of the range, because we can go, another 72 points in either direction before we actually hit critical mass. And I find that we'd have to have 2 trend days in the same direction, which is highly unlikely in this type of context that we're in. And then 19 points in the Globex range. Our value area high and low were higher at 83.50 and 71.50. Broke the IV to the low side at 9.48, and our volume was slightly higher than it has been for the last few days, but not as high as it was, when we were really getting that high volatility and those huge big swings. Okay, so let's go take a look at the macro to the micro. I don't even have my stuff set up, so we have to go do this. Gotta get this fixed. I don't know why my month won't go back far enough on Curiosity, but you can see that we're struggling to hold inside of last month's close, and we need and trying to stay above this month. We almost have a doji month setting up if we close somewhere right in this area, but the trend itself is intact. After going down and testing the 20 SMA, we've popped back up, and the trend is still certainly very much intact on the monthly. On the weekly, it's got a possible head and shoulder setting up here. Pay attention to the end of the week and next week to see if this sets up to be the right shoulder of the head and shoulder pattern, and the neckline will be somewhere down. I would use probably somewhere down around right here, about that 87 level. But in terms of the trend, we don't have one on the weekly, but we are holding above the 9 and the 20 right now, but nothing conclusive to give us on the weekly. On the daily, we do have this trend, but it is kind of weakening. We're coming down to close this technical gap on the daily. Tech gap will bring us, close will bring us down to 1950. Remember that we have that naked cross down there at that 1921 area. So I keep telling you to watch that area. If we get weakness, that's my target. If we, well, I'll show you why it's my target and where I'd start looking at it when we get into the other geometric chart. We do have this this energy point right here at 1956.67. It's due to hit on November the 3rd, so next week. We're right now coming down. We've tested the upper line of the downward sloping fork several times, but rejected it. If we do break below this, watch for them to come down and test the 1954.25, 1954.50 area. That's the lower line of the intermediate upward sloping fork right now. If we break below that and we see some weakness, a move down to the center line of the downward sloping fork will bring us down into the 1932-33 area. But I'm anticipating we're probably going to chop around in this area as we come down to hit this energy point. This is a pretty significant one. You have to look at where you are in context of the market, and this 1955.75 on July the 3rd is definitely doable right now, especially even if we get some weakness and they try to rally next week, or if we even rally today and tomorrow, we could sell off and come down. What day is November the 3rd? November the 3rd, well, Monday. Yeah, okay. So we've got 2 days of time. It could hit on the 4th as well. I usually give it a 1 or 2 day leeway. Going and looking at the intraday coming into the RTH session, let's see what trends are still intact. We see finally we're getting some weakness now. We're getting a little bit of rollover on the 4-hour trend that's been very strong through almost a week and a half or 2 weeks of RTH sessions, and we finally had our first close below the 20. So we're violating the trend. It is weakened, and we're closing below. We have a little bit of a FUBAR, Mr. Sneaky going on right here. Not much to close that out with a move up to 1968, 1969 level. Going to the 30-minute. 30-minute, we've just come up and closed a technical gap on the low side. We have a naked cross here on the 30-minute up at 1973. If we get above this 9 EMA and we don't reject it, I'd be looking for a move up to test the 20 SMA and take out this naked cross up here at 73. But if we fail to get out above the 6650 area, we could get rejection and a move down. This trend isn't strong yet. It's got separation, but it doesn't have slope yet. So the likelihood is we're probably going to come up and test this upper area before we reject. Maybe come up and test this 20 SMA and then reject from there. But if they get above, close out the naked cross and continuation up. 5-minute. We just closed out a technical gap here. Got a little bit of an upward trend, but we are seeing some weakness. We had our first close below the 9, but they popped right back up. I also got a naked cross on the 5-minute. So this is telling me that we're likely to see a rotational day today based on these violations of trends and slowing of trends and these naked crosses above and below us. Going over to the big picture, let's take a look. It's always got to put it into context, right? So go up to the big picture, just going to expand this out. You know, we had 4 gap ups. You know, we came down into this distribution zone that started this whole run up, and we gapped up, came up, created this upper distribution, came down, tested the lower end of this range, and tested the range from above, came down and really accepted this 1906 price. Then they rallied, made new highs, and created a distribution here. Rotated off of that, couldn't hold, rotated inside the distribution that gave us the launch, and then we couldn't hold that, and what do? We come right back down into the value area in the distribution around the 1850, which is our composite. Find the necessary buyers that we were looking for, gap up, hold value where we held value before, accept that value, gap up again, hold value where we held value before, accept that value, gap up again, get back inside of the distribution that launched us up, and then we gap up again, test into the value area of the upper distribution, almost to the tick to the composite or microcomposite VPOC. Sellers step in and rotate us back down, and now we're back inside of this distribution. You can see the value area high here is 1971, 72. That's that CLVN that's just above it. It's going to be a key line in the sand for us today, and then just above that you've got the 1977 value area low from this distribution, but we have not been able to penetrate and hold inside of the upper distribution. So we're back into this distribution, so we have to pay attention to these numbers until we break out above the 71, 72 level, and then see if we can get back above that 76.80. I'm really watching this 19.80 and a quarter. It seems to be a major area of our open and closes. And of course, we have our 2-day microcomposite VPOC. The most accepted price in the 2 days is down here in the 1966, just above this 1964 and just above this 1959. So right now, as long as we stay below 71.75, I'd be looking for another rotation down to the 66 level and see if we can pick up buyers with conviction. If not, we can't find them there. Next level is going to be the 63.50 area. That's the value area low and the CHVN. But if we break below that level, really it's the 62 that I've got my eye on, you can really use 61.50 to be safe. That's the range low from the 2-day balance. Then I'd be looking for a move down into the 59 and 57 range as we come down and close this gap at 57.25 and test the value area high of this microcomposite, this 3-day microcomposite that has the VPOC at 53. And in this area, I think we'll see a lot of chop down here. The key for us right now is to hold this 63.50, if not 62. I think if we can hold that, then we will pick up some buyers here, rotate back up, test that 71, and then if we break above, go up and close the naked close and get back up into this distribution and see if we can get a microcomposite VPOC to shift higher up into the 74 range so that we can accept value around that and finally make a move up and accept value back into the upper distribution for a move to make another run to an all-time high. Let me just go through and grab our overnight numbers and we'll set up our levels for the day. So our overnight high right now is up at 80.75, right at that key CLVN above us, 80.25 CLVN. So our overnight high is up there to be tested. Our overnight low is all the way down at 59.25, which is just below that naked close at 58.75 and below our range. So laying this out, it looks pretty simple here. This is going to be actually good levels today. 61.50 up to 62 is the low side of this range in here. The upper side of the range is right at the value area low at 71.50. That's right. Let me put the VPOC in here. Globex VPOC's not going to shift. 67.25. Get rid of that, and you can see that that 71.75 CLVN is right here at the value area low. How beautiful is that? That's going to be our trade area. In between there, you can see that we've got this wick. We could get stuck this morning inside of this wick above 61.50 and below 71.50. This is a no trade zone for me, and there's nothing there to give you an edge. I would look for a move down towards the 66 area. That's the value area or the microcomposite of the 2-day MC, and maybe down to 63. But there's really nothing to lean against in here in this level until you get down to the range low or up to the value area low. To the downside, not to have to do much down here, as I said. We've got the naked close at 59.75, naked close at 57.25, a naked VPOC down here at 55, and the key one that I'd be looking at is this 53.75 as my main target below, with the, come on, with the intermediate targets above at 55, 57. I mean, these are all targets, the overnight low. But you definitely want, if you get the breakdown, you want to be scaled before we hit that overnight low. There is a CLVN at the 56.75, but in my mind, it is not a safe edge. So I'm not going to use it. Down here, I'm short or I'm not in the market. Plain and simple. I wouldn't even start thinking about a long until we get down to this 49 area. And at 49, then I'd be looking for a rotation back up, finding responsive buyers down here, and rotating back up into the 53 to 59 area. But, below 60, 62, don't try to catch a falling knife, because this move could be very choppy in this area, as there's lots of undetermined fair value. Same thing in between here. I mean, just, you got to learn that, a position in the market, is being out as well. Sometimes it doesn't pay, it's boring. You want to be engaged. You want to be in the market, but sometimes it's not safe to put your money on the table. And smart traders will wait until they have an edge, and that edge to me this morning is these two levels. Now, above 71, 75, 71.50, you've got a pretty decent edge because you got the value area low to lean against, the CLVN to reinforce that, and you've got a good target above. You've got the mid at 74, you've got the naked VPOC at 57.50, and you've got the naked close right there too. What did we close at? Oh, we closed right at 72.25. Make sure if you take this that you want to scale right at 72.25. But I think once they get above an inside value, that they'll actually go for the naked VPOC at 75. And again, the 78 area keeps coming back into play, so I'd be looking for continuation up to that 78. And that is going to be another area that I will use to do business for a couple different reasons. It's going to be between 78 and, no, it's going to be at 78.50 because I want to get, if they break above that, come on. Do it that way. It's right on my zigzag. Just trying to move this. There we go. 78.50, because if we break above that, then I want to, go for that open of the prior day and the overnight high here at 80, and right at that key CLVN above. Now, this is going to be tough, but I'm going to use this as a trade area as well as a target, as I usually do. But I'm going to wait until we're above 81 for continuation, because I'm going to wait for them to take out that overnight high and then clearly get above the CLVN and hold value above there. We've popped in. You can see we popped above it here. We had a high of 80.75, and then we obviously had a bigger pop up to the 86 level, but we couldn't hold above it. So you got to be careful about that. First target above is going to be the value area high at 83.50. And then if we break outside of value, I'm looking for a move up into the balance area around 86.50 and a test of the range high from yesterday at 85.50. So this becomes a trade area, but I'm looking for responsive sellers again. We found them the first time. We could find them again, but if we come up here and accept this and hold above the range, then the bigger target above, we've got a little bit of resistance right here at 88.75. If we get above that, target is the naked close at 90, and the big target up here, 91.50. And then really nothing to hold us down there until we get to this 95 area. The 95.50 is the microcomposite value area of that upper distribution, and then above that, target 2000 and 2001, 2002, 2003. There's all kinds of targets up there. To the low side, if we get below that, you've got all my targets. Already did that. So there's the day. Let's take a look at what we've got on the Renko with Keltner. See how it lines up. So the center line is sitting at 66, which is right around over the VPOC. Remember that inventory is net short, so if we get above the CLVN and get back into value, the shorts could get squeezed pretty hard here. The 71.75 is the upper line of the Keltner. That's perfect. Fits right with our hypotheses. And then below 61. See how nicely the levels go together. So watch your structure, watch your levels, and use your stealth as an engagement tool to get you the best entry at those levels. What time do we have? 9:16. Let's quickly. I'm not going to do Russell. I put together the Russell sheet. I put it in the chat room. You guys can go through the hypothesis there. We'll just take a quick look at gold. I've got to get prepared. The problem is I get off these sessions a minute or two before the open, and I don't get a chance to prepare. I'm not going to bring yesterday's gold candle in. We were looking for that move to 18 yesterday, and we got it. I'm actually going to take this out now because we were looking for that break. Remember, we were talking about that 22. We would be targeting this this 18, if not the 06. We're back around that 06 area again. So we've got some weakness in gold as the indices continue to rally up. These days do not overlap, so I'm not going to create a profile, but I always want to look at what's the most accepted price in the 2 days, so I just basically put a profile. It's back up here inside of that, so it doesn't give me any good information. So I can get rid of that. Didn't mean to get rid of my composite. So I'm basically going to leave these as 2 breakout days with no real microcomposite. We are outside a range and back down in this distribution in around the 18 and in around this former 1206. I mean, if anybody has been around, everybody knows that 1206 was a major target for me to the downside when we were trading up in this area. We were looking for them to come back down there. Now we're back down there again. The key is here. We have to hold this 1187.80. If we don't hold this 1187.20, if we don't hold this, I'd be looking for a move all the way back down into this 1165.90 area. That's our next big destination. But if they can hold above the 1200 level, you know, it popped down below it. The low was 99.30. Then they popped back up. If they could hold that, look for rotation, you know, into this 06 area, and then if they can accept that value, a move up to the 1218, and then, you know, see if we can pop back into this microcomposite range and back up into the 1229 area. Like I said, I didn't like gold in this area, and it's now broken out. I missed the breakout, so there was nothing I can do about it. I actually showed the FUBAR Mr. Sneaky tech gap in Monday's homework, and I wasn't able to take advantage of it because I was in the middle of homework. Anyway, that's going to be it for me. As always, trade well, trade safe, and we will catch you on the flip side.